What's going on? This is Marcus and you're at the channel of the Debtfree Dad. In today's video, we're going to talk about my AMC stock portfolio because it was kind of crazy this week. If anybody, I don't know if y'all been tracking it, but it had highs, it had lows. It went up to $78, went down to 30 something dollars. So we're going to talk a little bit about that. I'll talk about what you should consider if you're still looking to invest in AMC. And I'll talk a little bit about everything going on surrounding AMC and why there is an expectation that the AMC stock is going to soar to surpass and beat GameStop numbers of $500 a share that it hit back in January. If you're interested in following my debt-free journey and learning about finance, I invite you to subscribe to the channel. Definitely hit the like button and hit that ring notification below. It'll help the channel grow. Y'all hear that? See, I gotta go in on a tangent. I can't stand this time of year. Y'all probably hear all of the explosions in the background sounding like Baghdad. But every year from June all the way until like mid-late August, it's just ridiculous amounts of fireworks. I like fireworks just as much as the next guy. I used to actually get fireworks and do like a fireworks show for the kids every year. But now, I'll lie to you now, fireworks starting about June 3rd, and it goes all the way through August. Don't even talk about New Year's. For New Year's, I mean, people start shooting fireworks at Thanksgiving. It's ridiculous. So I'm going to get some fireworks and I'm going to hold them and keep them, and I'm going to just start blasting them shits off at the craziest time. And it's always a crazy time in the morning. Like they'll wait till 1 in the morning or 2 in the morning to start blasting these fireworks off. So let's talk about it, AMC. Hey, before we start, I gotta give a disclaimer. I'm a licensed attorney, but I'm not your attorney. So if you got any questions related to the law or finances, I definitely advise you to seek a professional in your local geographical area and don't just go listening to some random guy on YouTube. Let's go ahead and dive right in. Let's talk about a little bit about short selling. I did an explanation on this in my last video. I got a diagram, hopefully that helped out. There's essentially three parties to a short sale transaction. You have a broker, you have the individual in the middle who's a short seller, and then you have the actual market, people in the stock market who are buying shares. So essentially what happens is the short seller borrows shares of a particular stock from the broker for a fee. Then the short seller takes those shares and sells them in the marketplace. So in this example, the short seller would say, hey, I'm going to sell 10 shares of AMC in the marketplace at $50 a share for $500. Then the short seller anticipates that AMC or the stock is going to lose money. So in this example, let's say the stock goes from $50 to $40. At that point, the short seller goes back into the market, buy those stocks back at a lower price. Then once he has those stocks back, he returns them to the broker, and that transaction is essentially complete. So the money that the short seller makes is essentially the difference from what he sold those stocks for in the beginning when he first bought them versus what he purchased them for when the stock went down in value. He sold 500 shares worth. Initially, once he borrowed the shares, the stock went down to $400. He bought those shares back for $400. He returned them back to the broker, and he was able to pocket that $100 difference. So that's essentially what a short sale is. Now, a short squeeze is essentially that same scenario, but instead of the price going down as the short seller anticipated, the price actually goes up. So in that same example, like I said in other videos, you have the short seller borrows shares from the broker. He sells them to someone in the marketplace, 10 shares, $50 a share for $500. He's anticipating that those share prices are going to go down so he could buy them back at a lower price, keep the difference, and return those shares back to the broker. Well, unfortunately for him, he borrows the shares, he takes them, he sells them in the marketplace, he sells 10 shares at $50 a share for $500. Instead of the price going down, the price goes up. When the price goes up, the price goes from $50 a share to $100 a share. Well, that short seller is obligated to buy those shares back no matter what the price is, because he has to pay back the broker. He can't keep the broker's shares. He has to return them back because they were borrowed. So where short squeeze come in is a group of persons anticipate that there is a lot of short selling or a lot of shorts with regard to a particular stock. People buy this stock and they hold the stock. From these people holding the stock, it essentially drives the price up because there are no stocks available for the short seller to purchase. The short seller has to return the stocks to the broker. But if people get the stock, they're holding on to the stock. They just diamond handing it, holding on to it, not selling it. They just buying and holding. The price is going to go up, 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 up. And that short seller is obligated to pay whatever that high price is for that stock, no matter how overinflated, because holding effectively increases the price. The price goes up. People in the market get FOMO. They don't want to miss out. They're buying shares of it, and all of that stuff just drives the price up. So right now with AMC, and I'm just look down on my phone so I can give the numbers as easy as possible. Right now AMC, our average buying price was $14.86. We started buying these shares for about $9.26 back in February. The total cost of the 89 shares that we purchased was $1,322.36. Right now, the current market value of the AMC holdings is $4,263.99. So right now, where we stand, we have a profit with regard to the AMC shares of $2,941.63. That's a return of 222.45%. So, and AMC is currently selling as of Friday at $47.91. So we got in at $14.86. It's currently selling at $47.91. We have 222% return for the most part on AMC. Now, last week was a bit of a roller coaster. At one point, it got as high as $78. I mean, the portfolio was looking lovely. And then at one point, it dropped all the way down to about $37 and some change. So I know a lot of people were just selling and getting rid of it. Me, that's not really in my game plan. So let's kind of rewind back in February where I first talked about AMC with you all. One of the reasons that I decided to invest in it was because, and this was just kind of outside of the whole short squeeze thing, this was because the movie theaters aren't going nowhere. I mean, even though AMC did or does have a substantial amount of debt, movie theaters aren't going anywhere. Coming off this pandemic, we already identified that people are going to want to go out, go see these summer blockbusters. Now, my understanding was, or my rationale was, buying AMC stock starting at $9, averaging out at about $14 a share. Absolute best case scenario, AMC, if all the conditions are great, there's no pandemic, they could be a company where their stock price could potentially be somewhere between the $25 to $30 range, just based on the numbers I looked at, based on what their historical high stock price was. So that was the reason for the investment. Around March was when the indicators for the short squeeze started to come in place. So at that point, we started to boost up the amount of AMC shares that we were picking up because we wanted to have an opportunity to be and participate in this short squeeze. Now, with the short squeeze, the first thing you have to realize is this play is not about fundamentals at all. We're not looking at the health of the company, the well-being of the company, the debt, the profit and earning ratios. None of that is relevant. All we're looking at now is that AMC is a heavily shorted stock. If a lot of people buy their shares and hold on to the shares, the price could be driven up exponentially, and short sellers will have to pay whatever that overinflated price is to get the shares back because they have to pay the brokers back. Let's talk about the level of risk involved. There's a substantial amount of risk involved if you want to get involved in this AMC play, especially if you buy now at these levels, $47, $50. I'll tell you, The risk for me is relatively less because I started purchasing at $9. My average buying price is $14. So it's not as high of a risk because I came in early on the AMC train. But if you're buying at these levels, you're essentially chasing the bag, and there's nothing wrong. We all chase bags at some time. There's nothing wrong. It's normal. That's what everybody do in the stock market on a play like this. But you gotta think and remember that if you buy in at 47, 45, $50, and you're watching these wild swings, $20 swings, $30 swings in one trading day, you may not be cut out for it. I mean, if you are cut out for it, cool. But if you may not be cut out for it, so it may be better for you to invest in something that's a little bit more stable. I had people calling me and was like, "Oh man, I sold at $42 because it went down to $38." And literally 3 hours later, it was at like $61, $64 or something like that. So you really have to be patient and have those diamond hands, be able to grab those shares and hold it. And like I tell everyone in every video, don't put anything in AMC that you aren't willing to lose. There are a lot of YouTubers out there who are talking about AMC, but it is a risk. It is a highly volatile stock, and there are going to be some large swings. So if you aren't in a position, don't use your rent money or your savings money. If you got a little something to throw at it and you're willing to stand in and stand through those wild swings, hey, then it might be a play for you. But if you aren't, take a pass on it. Should you invest in AMC? Now, I'll tell you, for me personally, I do think, well, let's take that back. If you believe that a short squeeze is going to happen and the AMC stock price is going to increase dramatically, then you'll probably be a person who's willing to invest at these higher levels. If you don't believe in the short squeeze, aren't sure of the short squeeze, you don't know if it's going to happen in that, you may not want to invest at these levels, because at these levels, again, it's going to be big losses and big gains. $20, $30 swings. The higher the price go, the bigger the swing is going to be. And some people just don't have the diamond hands to just sit there and hold it and say, hey, I'm going to wait it out. Some people watch it. And if you're one of those people who watch it all the time, there's nothing wrong with that. So let's take a look at just how AMC performed last week. We knew how it closed out the week, but we're going to go to a day-by-day chart so we can get a little bit of a better picture. Okay, so the calendar that I have up on the screen, it is essentially the month of May, just how the portfolio went. All the big substantial gains and losses are clearly gains and losses from AMC. Now, I know a lot of people are thinking, man, it was at $78, now it's at $48 or $47. This stock ain't really doing too great, but we got to put it in perspective. A week ago, it was at $26. A week before that, it was at $12. So, I mean, just considering where the growth over 2 weeks, people essentially made like a 200% profit in a 2 week period if they got in when the stock was $12. So let's take a look just kind of how the portfolio did daily. Again, this is for May of 2021. You can see early on is just mild gains and losses. Those are just with the regular stocks. But here's where you see the increases. Once you get until Monday, May 24th, you see a $74 increase. Then the 25th, you have a $131 profits taken on that day. The 26th, $194 in profits that were made. And the 27th, you have $619 in profit. On the 28th, it dropped down. We lost about $40. And then we move on to the 1st of June. On June 1st, we were up $528. June 2nd was a big day. On that day, the portfolio essentially did about $2,072. Then closing out the week, like I said, we took some L's on the back end of the week. Thursday, we lost about $1,000. And then Friday, we lost a little over $300. So that was really just kind of how the portfolio played itself out. Remember, with AMC, there's a great opportunity there to make some money, but it's a risk. Only invest what you're willing to lose. Only invest in it really if you got play money. And if you really want to take advantage of it, and in respect, because there are day traders out there, there's people out there who are going to put their money in at $50 and get to $60 and they're going to take their profits. You can play the game that way, but me, as far as how I'm moving, I'm going to just kind of diamond hand it and hold it until it gets to a price point that I believe it's going to get at. Now, later on, I'll talk a little bit about, maybe in another video, I'll talk about what my price point is. But one of the keys to the short squeeze is the price goes up as people hold it. So what essentially happens is the price is going to go up. Let's say, for example, AMC hit $100. It's hard for a lot of people to sit there and say, oh man, $100 a share, I got 1,000 shares, I'm about to go ahead and sell it. So, you know, you really have to put things in a perspective, because people purchasing shares and holding on to the shares, just trying to diamond hand it to force the price up, that only works so long as people diamond hand and hold those shares. Essentially, everybody has a price point. I don't care what people say. People talk about AMC to $100,000 and $10,000. People are going to sell their stocks way before it reaches $10,000. So AMC is a stock that has potential to go to the moon because of a short squeeze, but a lot of people get burnt because they ride that rocket ship when it goes up, but they stay on and ride it when it comes back down, crashing the earth. So you have to have an exit strategy. You have to have a dollar amount in your mind that if it reaches this dollar level, I'm going to take out my initial investment, I'm going to take profits, or I'm going to take out all of my investment. Or you can have the mindset of me where, hey, I'm just going to leave it in and let it ride. I'm not going to put a trailing stop loss or anything to that effect right now, because I'm keeping my eye on it and I just want to see what it does until it hits the price target that I'm looking at. I appreciate y'all tuning in. As always, check out these videos and hit the link in the middle if you're not subscribed to the channel. Become a part of the family. Y'all take care. Be blessed. Peace.